Good evening, ladies and gentlemen. Welcome to Business Today Television. In our ongoing series of Markets at Record Highs, we bring you interactions with top financial experts who have an in-depth grasp and a deep understanding of their subjects, including markets, stocks, technicals, and fundamentals. Today's guest is Mr. Ashish Chatramotha. He's the Executive Director and Fund Manager at JM Financial Services, and he looks at the Apex Fund under their Portfolio Management Services. Apart from being a very dear friend, Ashish has about 16 to 20 years of experiences in the market. He's a qualified chartered accountant, and his key strength lies in combining fundamentals along with technical studies, which help in identifying companies with a strong fundamental background and an equally good technical setup. Ashish bhai, welcome to the show, and it's such a pleasure to welcome you on Business Today Television at a time when the markets are at record highs and everybody is asking the question, what next and what to do. Welcome.
Thank you, Shelban.
Chaliye, let's start with the show. Without beating around the bush, Ashish bhai, I just want your views on where do you think the markets are headed. We've seen a very, very sharp rally on a year-to-date basis on the Nifty, and as also on the Bank Nifty. Many other indices are at record highs. How do you see charts? What is your understanding of fundamentals about this rally?
Sure. So, Shelji, what I feel is that, markets after consolidating for almost 1.5 years, that is in October 2021, when we peaked around 18,700. And after that, we have been consolidating for a while, for almost good 1.5 years time frame. Now, technically speaking, this kind of consolidation breakout after a decent 1 to 2 years kind of phase typically leads to a very strong up move at an index level. So a lot of people are worried. They think that obviously markets have moved up very sharp in a very short span of time. So whether it's a good time to enter at these levels, wait for a dip, or it's kind of a sell on rise market. According to me, it's more like a buy on dips market, because there are some structural changes which is happening in India. First, RBI, when it paused its interest rate, that is how, we created a bottom in our market. Since then, we have been seeing very strong capex commitment by center, almost 10 lakh crore kind of capex. And if I look this number, if you put together addition of almost last 10, 15, 20 years, I think the kind of capex we are witnessing in this particular year has crossed this number all put together, which clearly indicates that we are shifting typically from a consumption-led economy to a capex-led economy. And we firmly believe whenever there is a capex cycle which starts, it typically lasts for a longer time. And if you look at the capacity utilization for most of the industries, they have reached 73, 74% kind of levels. We have seen private balance sheets are improving, and that will eventually lead index to show further up move. According to my technical setup, till the time we don't see a breach below 18,500 on a sustainable basis, all kind of dips should be used as an opportunity to buy.
Ashish bhai, you are the right person to ask where the index is headed in the short term as also in a 1 year period. You've mentioned that 18,500 looks to a strong support for the Nifty. Let's look at two small stations, one till Diwali, which is in November this year, and maybe by March 2024, when the country would be getting ready for the next round of general elections, and of course will also be around the budget in February. What do the charts tell you as far as the Nifty is concerned for these two periods?
Sure. So, Shalji, as I mentioned, this consolidation was between 16,000 to almost 18,700. This is a 2,700 point consolidation which we were witnessing for almost last 1.5 years. Typically, when you see these kind of breakouts happening, at least we will see 61.8% rally which will start happening. So, what we are looking both from a fundamental perspective as well as technically is that index is going to move towards 21,000 kind of trajectory. And, till now, we have seen, Reliance has been completely underperforming except for last 3-4 trading sessions. So there is a lot of contribution which can start coming from Reliance. We are seeing Bank Nifty almost seen some correction in the last couple of trading sessions, but we firmly believe corporate credit growth as well as retail credit growth will be in the range of 17 to 18%. NIMS will be will be on a higher side, and NPS will be on the lower side. Keeping that in
Right.
mind, if 2.5 time price to book will look, banks look very reasonable. And keeping that in mind, I think Bank Nifty is poised for a move towards 50,000 in a shorter term time frame.
Okay. Let's get the Nifty out of the way first, Ashish bhai. 21,000. When do you see that happening?
So, Shaba, it's very, very difficult, but as I see, the momentum is very strong. Sometimes this kind of moves which come, they come very, very, sharply. The reason is a lot of people have a skepticism because they have missed the rally. So generally they won't participate. They will wait for a dip, and that is how market behaves. So my sense is in next, by Diwali or maybe by year end, that is by December, we will logically see Nifty hitting 21,000 kind of trajectory.
Wonderful. So Ashish sticks his necks out, and he says that in 6 months to 4 months time frame, you'll see the digit changing on the Nifty, and that's 21,000. That's out of the way, Ashish. Over a period of time, in the course of this program, we'll also discuss individual stocks, but let me just get this question out of the way before we get into the Bank Nifty space. Ashish bhai, what are the stocks apart from Reliance that you feel will drive Nifty higher?
So I think, see, as I mentioned, Reliance, apart from that, banking as a sector should do very well, Shalbai, because as you see, the systemic credit growth is close to the range of 17 to 18%. We are seeing the valuations at a very comfortable zone in a range of 2.4, 2.5 time adjusted price to book. If you look at the NIMs are expanding and the NPAs are at a much, much lower level. So keeping all this in mind, my sense is Bank Nifty is heading towards 50,000, and this time HDFC Bank, ICICI Bank, Axis Bank, and one particular PSU bank, which is State Bank of India, will drive the market towards Bank Nifty towards 50,000 levels. My topic, as you know that I've been talking about PSU bank these for a very long time, and my firm belief is that maybe Axis, ICICI, HDFC Bank, they will give good returns in a medium to long term. But if one wants to really make some higher alpha, then typically it should come from PSU bank these banks, and typically if one has to play that trend, then ideally PSU bank these ETF is a good way to use this opportunity to ride this rally in the PSU banks, which are typically available at 0.6, 0.7 time price to book, and a very strong credit growth is what we are witnessing in PSU banks as well.
Wonderful. So the entire PSU banking basket can easily be purchased via a single ETF, and it's currently, let me just see the price. I must tell my viewers that Ashish bhai has been very bullish on this ETF for a long time, and a lot of his investors have made supernormal money on this particular ETF. I'll post this on my Twitter account. I can't find it at the moment on the software that I'm tracking, but yes. So just track the entire PSU banking basket via the ETF, and obviously the 50,000 Bank Nifty target, Ashish bhai, Diwali or December?
I think Diwali, Shelbhai, I would be a little more bullish here because I think the kind of underperformance we have witnessed, if we see a rally, it will be very sharp and it will, try to create a huge short covering. So keeping that in mind, I think in a very short span of time, we should see this number.
Okay. So ladies and gentlemen, for the record, we've seen about a 5% rally on year-to-date basis on the Bank Nifty. And from here on, at about 45,000, Ashish feels that you have a 10%, 12% uptick still left over the next 6 months. That's for the two main indices, Nifty and Bank Nifty. Now, let's get our hands dirty with the mid-cap space. Ashish bhai, fantastic rally on the Nifty mid-cap index, a 15% uptick year-to-date, and there is no stopping good counters, there is no stopping momentum plays. Let's start with what you like best in this space, and you mentioned Policy Bazaar, which is PB Fintech. It's a loss-making company as of now, and we've seen the IPO at 980 rupees per share in November 21. The stock currently at $700. What are the charts telling you on PB Fintech?
Sure. So, Shalbhai, as I mentioned, first of all, as a disclosure, this is not a recommendation to buy or sell, but what we like, and we are holding these stocks in our portfolio Apex PMS strategy. So, as far as Policy Bazaar is concerned, as you can see, and the charts are indicating, this stock has seen a sharper correction post its listing from 1500 odd level to almost 400 kind of trajectory. After seeing this fall in the last 1.5 years time frame, we have seen very strong base building happening into the stock between 400 to 600 trajectory. As you can see in the last couple of trading sessions, there is a very strong breakout which has happened after consolidating for good 10 to 12 weeks time frame. So keeping that in mind, my sense is this stock, a new platform stock or a new age business could see a very strong sustainable rally. The reason why we like fundamentally also, if you look at the insurance as a space, is growing at 15%, but if you look at Policy Bazaar PB Fintech, it's growing about 25%, so which gives us very strong comfort that this is one company which is going to outpace the industry growth. In terms of margins, in terms of profitability, this company is turning EBITDA positive, and a lot of investors were waiting for these stocks to turn EBITDA positive. So whether it's Policy Bazaar or Zomato, a lot of these stocks, investors were waiting for these stocks to turn EBITDA positive, and which has started happening in last couple of in the last quarter, and that's why my sense is there could be very serious interest in the platform business, and particularly in stock like Policy Bazaar.
Wonderful. The chart that you see for PB Fintech, which is actually Policy Bazaar, is a weekly chart. And in November 2021, the stock hit an all-time high of 1,500 rupees. It corrected down to 400. And as you could have seen, a good base building has happened. Let's shift focus to another mid-cap, Ashish Bhai. And you are very keen on new IPO companies because they are undiscovered hidden gems, and they do wonders to your portfolio if you catch them at the right instance. Your next pick is Syrma Software, which is Syrma SGS Technology Limited. Tell us something about this. This is again an IPO which came at 220 rupees per share in August of 2022, and the stock has more than doubled after seeing a bit of a pain. Ashish Bhai, your views on Syrma SGS Technology.
Sure. So, Shalbhai, we hold this stock in our portfolio, and this is not a recommendation, but we like this stock because it is into electronic manufacturing services. The segment is growing at 30 to 40% kind of growth, and specifically Syrma SGS, because this is a small cap, mid cap company with a 7,800 crore kind of market cap. Promoters are holding close to 48%. FII is holding almost 13% in the stock. And if you look at this company has a lot of ODM contribution, original design manufacturing. So typically because of this ODM contribution, the margins are in the range of 8 to 9%, which is typically higher than its peer segment, which are typically trading in a 3 to 4% kind of margin profile. The reason being I'm really sorry, ODM, original design manufacturing, generally gets a very strong margin. The good part is this company has almost 45% coming from its export revenue, and no particular sector or customer or industry contributes more than 10% of the revenue, which typically gives us very good confirmation that there is no concentration of risk or revenue, and that gives us a lot of comfort. We expect the company to grow at a revenue and earning CAGR of almost 41%, and the return on equity is going to improve from 11% to almost 13%. So keeping that in mind, we firmly believe this could be a very structural story to play this entire electronic manufacturing services segment.
Okay, Ashish Bhai, I'll be the devil's advocate here. We've seen the stock move very sharply from 250 to 90 rupee levels to about 400, 432. Do you think this stock might consolidate from these levels and then probably move higher, or do you feel that the demand is so high? I've been seeing a lot of financials for Syrma. The market cap is 7,900 crores, and the top line is just 600 crores. It's a profit-making company. Anything that worries you at the moment, because the rise has been fantastic?
So rise has been fantastic, and that is how Shalbhai, generally we see stocks see compounding. So if you look at the earning growth momentum as well as the revenue growth momentum, we expect the stock to do a 41-44% kind of growth. Company has done a capex of almost 500 crores, and there is an order book for almost 2,100 crores. So typically with this kind of strong order book, we expect there could be a very strong asset turnover, which will lead to EBITDA margin expansion. And if you look at from a valuation perspective, if you look at the peers, whether it's Dixon or Amber, or for that matter Avalon or Keynes, typically the space is quoting around 40 to 50 PE multiple. The reason being, because we are going to see a growth of 41-42%, the PG ratio is going to be in a range of 1 to 1.2%, and that's the reason we believe even after seeing a strong rally in the last couple of months, there could be reasons for stock to see re-rating. And as you know that we follow technicals along with fundamentals, we are looking for 390, 400 as a very strong base. In case if the stock sees a breach below 390, 400 trajectory, then definitely we will consider our stance in terms of our positioning.
Okay, so Syrma Technologies, as you can see from the screen, in the last 6 months has appreciated close to 60%, and Ashish Bhai is still bullish from these levels. We'll run through the mid-cap space and then come to large caps. Ashish Bhai, your next pick is from the auto ancillary space, a company that's recently seen its foreign promoter come to the driving seat. I'm talking about CIE Automotive. What do you think about it? A nice profit-making auto ancillary, 20,400 crore rupees market cap, fantastic profit growth, 663 crores, and about 4,500 crores in sales. CIE Automotive, the chart is in front of you.
Sure. So, Shaibai, as you know that, Nifty Auto as an index after consolidating for good, I would say 5 to 7 years time frame is in a very strong trajectory. And that's the reason we firmly believe auto as a sector will do extremely well. If auto does well, then auto ancillaries will continue to do very well. And specifically company like CIE Automotive, because Mahindra has exited the business. Now it is a pure MNC entity with CI Automotive Spain being its holding company. We firmly believe that aluminum forging could be a growth trigger for a company. And typically, if you look at the EV contribution coming, is at this point of time is close to 30%. But we firmly believe this 30% contribution is going to rise to almost 50% in the EV segment, and that will lead to margin expansion. So we expect the EBITDA margin in a range of almost 17 to 18%. And because of this, we firmly believe the return ratios are going to improve. So over 20% kind of ROC we are expecting in the stock. If you look into the valuation perspective, we expect 35 rupees EPS. And if we give a multiple of 30 rupees to 30 times to this EPS, typically we expect the stock to go towards 1,000 trajectory in the longer term time frame. And as we see, the cash flow from operations has been very strong. So for the last 5 years, cumulative operating cash flow has been in a range of 40 to 50 crores. So this makes us believe that this company could be a structural story going forward.
Wonderful. So we've gone through the list of top mid caps, which Ashish Bhai is hoping will outperform. Let's shift focus back to the Nifty and constituents of Nifty. Ashish, you mentioned 21,000 that's coming around Diwali, and apart from Reliance and the banking space, there are other stocks which are on your buy list or on your portfolio where you feel that the bullish trajectory will continue. Which one would you like to start with? Let's begin with the alphabet A.
Sure. So we believe that Apollo Hospital could be a very strong structural story. We firmly believe this company, Healthco, is going to be, the losses is going to reduce to zero. We expect that the case mix is going to improve, and that will lead to a lot of margin expansion. In coming days, we expect that the sales and EBITDA margin to expand to almost 20 to 25%. And keeping that in mind, the EV EBITDA of almost 23 times for healthcare services could be a valuation. So my sense is Apollo Hospital is looking very, very strong from a fundamental perspective. If you look at technicals, Shalbhai, if you look at this stock, it has been consolidating for a very, very long time. In the last, I would say 2 years, this stock has been consolidating. And after consolidating, for 2 years, now there is a fresh breakout, which we have witnessed about 5,200 in the stock. So keeping that in mind, my sense is stock is poised for a move towards its previous all-time high, which is around 6,000 levels in next 3 to 5 months time.
Okay. In any case, the hospital landscape in India is undergoing a dramatic change. We are seeing newer, better, deeper pocketed players, getting into Indian hospital chains. And of course, Apollo is the largest branch network in India in terms of large and small hospitals. That is what Ashish is liking for the stock. Remember, this is not still at a record high, about 300 rupees off still there, and that's the space that Ashish wants it to bridge. Apart from Apollo Hospitals, what else looks good in the Nifty to you, Ashish? Some old stocks which I used to track in 1990s. Anything that you like in that space?
Sure. So two stocks. First, I'll go with Maruti. So my sense is Maruti, after seeing underperformance for almost 6, 7 years, is now coming out of this long-term consolidation. So last time it hit a all-time high of 1900. It was in 2017, and after 2017, now this is the first time we are witnessing stock crossing this long-term consolidation range. Typically, this kind of 6 to 7 years consolidation can lead to a very strong rally. Fundamental reasons, if you look at the commodity prices are correcting, so that is a very positive for a lot of these auto companies in terms of margin expansion. In terms of business momentum, if you look at Maruti has been expanding into EV segment, into CNG segment. They've entered into they've been launching a lot of SUVs. So they lost almost 10% kind of market share in the last 6, 7 years. But now I think with this kind of strong launches, we expect the stock to see a lot of recovery in this market share gain. And if that happens, I think there could be a very significant re-rating which can happen to Maruti.
Yes, the last time you had seen the company approach 5-digit mark was somewhere in 2016, and beyond that we are now seeing a good up move. As you would have read a lot of pink papers, and as you would know personally, a lot of people, buyers, are now upgrading their cars, and they're looking for features which they pay a higher price for. That includes improvement in margins. In fact, Maruti just recently joined the club of exclusive SUVs which are priced above 20 lakh rupees. So that should reflect in the bottom line and therefore the stock price as well. Last but not the least, Ashish bhai, one more stock which has held investors in a thrall over the last 40-45 years, and is from the infrastructure space, which you so rightly mentioned, is seeing a fantastic run up over the last 1.5, 2 years, both in terms of capex planned and of course the government spending that is coming into the system. The last pick of yours.
Sure. So, Shalbhai, we like L&T a lot. We firmly believe the kind of capex which government is doing. Center is putting in almost 10 lakh crore kind of capex. The state is putting in almost 5 lakh crore kind of capex, and private enterprises are doing a capex in the range of 7 to 8 lakh crore. So, with these kind of strong capex, typically all capital goods companies will be in a very strong trajectory. We have been liking stocks like L&T, Siemens, Cummins, and ABB. But at these valuation and at these levels, we firmly believe L&T could see very strong outperformance, considering the kind of order book this company is witnessing. So my sense is, in the longer term, medium to longer term time frame, L&T should continue doing very well. And because it has got good weight in Nifty, ideally, as you asked me, which are the stocks which can really ride the rally towards 21,000 kind of trajectory. In that, I think L&T should be one stock which should be in a position to show a very strong outperformance.
Wonderful. Larsen Toubro is an elephant which Ashish bhai feels can dance at about 3,47,000 crore rupees in terms of market capitalization. The stock is obviously at a record high, and so are a lot of its peers and competitors like ABB and Siemens. We are seeing a very strong rally coming into the infrastructure space, of course led by L&T and the other two stocks that I mentioned. Even the mid-cap infra space is buzzing with a lot of good stocks that are showing record highs, but we'll leave that for a different show and a different time. Ashish bhai, thank you so much for joining us. I'll just repeat for the sake of our viewers the various points that Ashish has talked about. He sees Nifty hitting 21,000 points somewhere around Diwali to December. Bank Nifty is likely to hit 50,000 points from 45,000 now at around Diwali. And his mid-cap picks, where a lot of his PMS money is already deployed, is PB Fintech, which you better know as Policy Bazaar, then Mahindra CIE, and of course the third one being a small software company called Syrma SGS Technologies. Within the large cap space, Ashish bhai is bullish on Apollo Hospitals, Maruti, as also Larsen & Toubro. Thank you, ladies and gentlemen, for joining us. Ashish Bhai, thank you so much for sparing your valuable time. And do keep tuned into Business Today for this particular segment on a daily basis. We try to solve the complexities of the market in very easy terms and help you navigate these record levels with stocks that offer a lot of upside and are also very, very strong on the balance sheet and on the profit side. Thank you for joining us.
Houses washed away, parts of hills coming crashing.